Are you a self-storage owner or operator looking for service providers to help at your facility? Well, the Storage Business Owners Alliance, also known as the SBOA, has you covered. The SBOA is a premier online hub for connecting self-storage owners and operators to industry-leading products and service providers. We provide one-stop shopping for your business with exclusive offers to save time and money. At the SBOA, we believe by coming together, we help owners and operators grow revenue, gain purchasing power, reduce expenses, improve efficiencies, and increase profitability. We also offer many resources such as our conferences and Self-Storage Unlock webinars to help self-storage owners and operators gain the knowledge needed to become more competitive in the industry. To become an SBOA member or to find out more information, please visit www.thesboa.com today. We can't wait for you to join the Alliance.
Good morning, self-storage industry. Thank you for joining us again for another SBOA Self-Storage Unlocked. Today's episode is all about cost segregation, understanding cost segregation, and the benefits of cost segregation. So we've got a really good one for you because I know there's a lot of people out there that have questions about this topic. So happy to bring this content to you today along with CSSI and Warren. So for those of you that don't know me, I'm Jessica Johnson. I'm the Vice President of the Storage Business Owners Alliance, better known as the SBOA. And we are a leading provider of networking, educational resources, and getting you connected to service industry providers out there in the self-storage industry that we know, like, and trust, and we use. So thank you all for taking the time to be here with us today. I see many of you are in the comment section telling us your name and where you're from. Please utilize that comment section today to ask questions of Warren and I as we go through today's presentation. And then that last commercial that you saw, Storage for Rookies, that's an educational program that we created out of our sister company, Storage Pros Management. We owned and operated close to 150 locations across 8 states. We sold that entire portfolio at the end of 2019, but we are back as owners and operators again, as we have 6 properties now in Oklahoma, and we are looking for more. So if you are a new owner and operator in self-storage and you want to learn from people that have been around doing this successfully for 25 years, highly recommend you join us for Storage for Rookies. The next one will be on Thursday, August 24th. It's from 11 a.m. to 5 p.m. Eastern Standard Time, and it's all virtual. You can see here on the screen the information. If you visit storageforrookies.com, you can go there and register. And I believe if you follow us on social or you follow our newsletter, excuse me, we had a free code for free tickets in there the other day. So try to find that free code and utilize it. So I want to get us kicked off. We have just one speaker here with me today, and it's Warren from over at Cost Segregation Services Incorporated. Say that 3 times fast. Hey, Warren, how are you?
I'm great. So the way you say it 3 times fast is CSSI, CSSI, CSSI. There you go.
So much easier, right? And then your other company, CSSI Energy Services. And Warren, give us a rundown of who you are and those 2 separate companies and what you guys can do for the self-storage industry.
Great. Nice to meet all of you. Thanks for joining us. I see names popping up on the chats and where people are from in the comments. I'm Warren Dazzio. I'm from Baton Rouge, Louisiana. Our company was started here 20 years ago. We're in our 20th year. What we do on the tax side is that if you own a building, own a self-storage facility, we likely can help you reduce your tax income through depreciation. We also do consulting on other things besides just cost segregation. Hey, I'm doing a repair on my facility. Can I expense it or do I have to capitalize it? Hey, I'm tearing a bunch of stuff up and doing a big improvement. Is there any tax plays involved? So we can help with all those different areas. Our energy services division can do everything from a retrofit project to new construction for LED lighting. And we'll chase down, are there any tax savings available? Is there a rebate available? And you'll additionally get energy savings. So that's the two kind of divisions that we have. We call it tax and then LED retrofit. So those are the two main things.
Awesome. Well, thanks so much for being here today. And I want to dive right into this, Warren, because I talk to so many owners and operators and they're like, explain it to me. And I'm like, you don't want me to explain it to you. All I can tell you is they saved us millions of dollars, literally. So let's just, for general context, let's talk about what cost segregation is in the context of self-storage facilities.
We can do that. Can I share a couple of screens?
Yeah, absolutely. Let's put your stuff up on screen and take it away. You should be able to go right through it.
All right, I'm going to skip kind of a bunch of screens and just kind of get us to, generally speaking, what we're doing is we're reducing your federal income taxes. If you don't have to pay as much federal income taxes, then maybe you have cash flow now. Hey, if I have a $50,000 tax bill to the IRS and now I don't have to spend that $50,000 on my taxes, do I have now a deposit on phase two? Do I have now a deposit on another self-storage facility? There are people that use this strategy. They use cost segregation on their first two properties, and they've got enough cash flow now to buy a third property. So the whole idea is if I don't have to pay the IRS, I can take that money, invest it in new properties, and the time value of money allows me to win from that. Great candidate is anyone that owns a building. I'm kind of skipping through and getting to what is cost segregation since she asked specifically that. But yeah, so it's really the process of analyzing and identifying parts of your building that can be accelerated. Okay. If you look at it in another way, it's like your building has different buckets. Okay. And in the self-storage world, most of the buckets, people will depreciate a building or a self-storage facility over 39 years. So if you had $1 million building, you get 1/39 of that to offset your revenue each year. By doing a cost seg study, you drop stuff into different buckets. Now you have a 5 and a 7 year bucket. You have a 15-year bucket. You have a 15-year QIB bucket. And what are those items that we're putting in those buckets? These kind of things. We're taking on the 39-year, it's the structural, the kind of exterior of your building, the structural walls, the guts, the things that kind of keep it together. The concrete underneath your facility is a 39-year asset, your doors and windows and walls. The tangible personal property is the things in your facility that can be accelerated. So interior doors, wall partitions, security camera, cabinets, specialty plumbing, specialty electrical. If you have a wine section in your self-storage facility, that's specialty plumbing. Maybe you have, and a lot of people don't realize the wall partitions. If you had two 10 by 10s, and a client said, hey, I want a 10 by 20. In theory, you could remove that wall. A lot of times it's bolted to the ground and bolted to the sides and bolted to the roof. You don't move them very often, but you could. So the IRS says, since that could be moved, it's a 5-year asset. And those are two great examples. A lot of people just put all their doors at 5-year. If it's an exterior door, it's a 39-year asset. If it's an interior door, it's a 5-year asset. There's a court case that points it out and says if you didn't have the exterior doors, you'd have security issues. Somebody could just walk into every unit. So they call it kind of structural. Everything interior is a 5-year-old. And that what a 15-year QIP bucket is if you have a self-storage facility and you go in and do a bunch of renovations, you tear stuff out, there's a tax play there, you put new stuff in. If you're putting an interior non-structural item in your facility, hey, we're going to reskin the inside, we're going to put new doors. All that is called QIP, and you get to accelerate that as well. And then lastly, land improvements, everything outside, landscaping, parking lot, fencing, lighting, all that kind of stuff is a 15-year asset. So the long and short of it is if I can accelerate that faster, the kind of green line, rather than spread it all out over 39 years like that blue line says, I can accelerate it and I can get it done a lot faster. And that gives me cash flow that I don't have to pay taxes on, So does that give you a decent summary so far, Jessica?
It does. I mean, my next question is, how could this benefit owners? Cash flow with less taxes. I mean, that's all I need to know.
Yeah.
Right. Now, Warren, back to those four main buckets you were just showing. That's it, right? Are there any others that we need to know about, or those are the four main categories, and then those are all the things that they would consider are the assets that would fall into a self-storage cost segregation study?
Those are the four main buckets. I can't
Okay.
list everything that way identified, so there's many more things that fall in this category.
Okay, cool.
I'm giving you kind of the summary of what's in there. Here's another example that, someone says, why do I need a cost seg firm? My CPA does this, even the wiring in the walls that goes from your circuit box to appliances in your building, the length of that wire is all a 5-year asset. If you didn't have engineers on your team that knew construction and accounting, how would you find that number? So that's an example of why people use a cost seg study. There's lots of things that we can dive into a building because we do this every day. I'll never throw a CPA under the bus. They've got loads and loads and loads of work to do.
Sure.
We specialize in this. So a lot of CPAs call us and say, hey, client wants to do this. Tell me what tax plays are involved. And we'll walk them through that. So
got it. So are there specific criteria or requirements that a self-storage property needs to meet to be eligible for a cost segregation study?
The easiest, I think, would be you can't be running at a loss. You have to be making money.
Okay.
So then if I can create a deduction that's like an expense that offsets your income. So that's the first thing the second thing might be, if you're going to flip a property in 1 to 2 years, it's not the best timing to do this because the whole idea is if I don't have to pay $50,000, I can invest that in some way, shape, or form and get anywhere from 5 to 12% on my investment, depending on what you invest in.
Sure.
If I'm going to sell a property in 2 years, it doesn't give you a whole lot of time to invest that, and you have to just recapture when you sell that. So
right.
Any depreciation you take, whether you accelerate it or not, you have to pay what's called recapture, and it's basically the IRS saying, we loaned you those deductions. Now we want them back. You keep the interest, but we want the original principal back in the form of recapture. And so that would be the criteria for an owner. The criteria for a good cost seg study, and I've heard people say, oh, I'm going to do the DIY cheap version online, which,
right.
Surprisingly, some people do that.
I know they do.
Yeah, they're kind of 7 types of cost seg studies, and the kind of the gold standard is an engineering-based cost segregation study. And that's what we do at CSSI. We take a building, break it out into its parts and pieces. Those engineers look at tax software and accounting software to get them to the right number. And then we deliver that result for a client and their CPA to apply on their tax return. So that's the gist of what we do. And the other types of cost seg studies are, you have more of an opportunity to be challenged on that than you do on an engineering-based cost seg study. We've done somewhere in the neighborhood of 40,000 studies. We've never triggered an audit, but we have represented clients about a dozen times in our 20 years. We always had happy client and happy IRS. By the time we were done, the IRS said, okay, these guys have crossed their T's and dotted their I's. No worries here. And
that's good.
That's 40,000 studies that we participated in an audit. A lot of people say, hey, am I going to get audited because I do that? That's pretty good numbers. We've done 40,000 and only 12 of them have actually been looked at. Usually it is something else that triggered the audit, and our cost seg study gets reviewed as part of the process.
Got it.
I can't think of one instance where they said that cost seg is wrong, we want to audit you. It's always been something else and they bring us in.
Awesome. I'm taking so many notes because I want to be able to explain this better when owners ask me. Because like me just saying, trust me, just go do it. It'll save you millions. While they listen, when I say that, it'd be better if I could have some more clarification. So, hey, Warren, so is there like a range that you could maybe give me that you see on a national average as far as like a percentage of what those potential tax savings are?
There is. I'm sorry, I'm flipping through so many slides.
No, you're good. Get to the main one and we get it.
So these are some of the numbers. These are results. Typically, in a self-storage world, I would say it's in the range of 20 to 35% of your purchase price. So here's how we figure that out. I buy $1 million building. Let's say the land is worth 15% of that $1 million. So I pull out $150,000. I can't depreciate that land. So I'm looking at $850,000 in my building basis. That's the the land improvements and the building that I can accelerate. So if I take 850,000 and I multiply that times 20%, excuse me, yeah, 850,000. I thought I said 800 million.
We'll take that one.
No, if I multiply that 20%, that's $170,000 deduction. If I multiply that times the highest tax bracket of 37%, I get a $62,900 tax savings. So that's kind of the low end on $1 million property that you'd look at. The high end would be more like 35%. So if you did 35% times 800,000, you get 297,000. Multiply that times the tax bracket, you get 110,000 in tax savings. So on $1 million building, your range would be 60 to 110. On an interior self-storage facility, the number is going to be 30 to 35% or even higher. On an exterior facility, it might be 20 to 25%. And
Gotcha.
that gives you the idea of the thumbnail. It comes out to be real money. If I'm planning on paying the IRS and I'm talking to my accountant and I've got, hey, it's going to be a $75,000 tax bill, and I do this to my small non-climate controlled facility and I get 62,000 in tax savings. Now I'm only paying the IRS 13,000 and the other 62 stays in my pocket. Or hey, now I can do those improvements I've always wanted and increase rent. Now I can begin phase 2 and we can buy another property.
Heck yeah. I mean, anything to enhance the property to get more rentals and increase your rent. I mean, I'm here for it for sure. So Warren, explain to me, okay, I'm an owner. I want to have this done. What does the process look like from start to finish? What do I need to provide you for documentation? Do you guys kind of walk us through this and help us? Walk me through that.
So we do what we call a pre-analysis to begin, okay? And what that pre-analysis is I'm kind of scrolling through all my stuff. Here you go. What that pre-analysis is you tell us, hey, I've got a self-storage facility. It's 80% climate and 20% non, or it's 100% non-climate control. Give me the address. Give me the cost. If you don't know the land number, if you just purchased it, I can help you with that and get you in the ballpark. Give me the year and the month you acquired it. And then we'll run those numbers and create what we call a pre-analysis. We can do that in a couple of business days. It doesn't take long to do that. And that pre-analysis is an estimate on the 40,000 other studies we've done. It's saying, hey, this is what your property looks like. We've done a lot of other studies and, we think this is the conservative range of where you're going to get. If a client said, wow, I'm interested in that $62,000, they would sign an engagement letter, pay us 50% of the fee, and then we begin collecting data. We say, do you have the cost basis? The cost basis is if you've had a building for a few years, that's going to be on a depreciation schedule that your CPA gives you. If you just purchased it, then, hey, my cost basis is $1 million minus the land, and we can kind of ballpark the land. Eventually, we have to get the client to say, this is the number I want to use. We're not land experts, but we can show you how other clients have done it and what the IRS accepts, and you choose one of those methods. Then we ask, do you have an appraisal? Do you have blueprints? And then we send somebody to the property to do exterior pictures, and then we hope to get in 3 or 4 of the different size units that you have. And we document it all with pictures. It takes us, once we get all that data, it takes us somewhere in the neighborhood 4 to 6 weeks. In the middle of tax time, it's kind of that 6 weeks, maybe even 8 weeks. Downtime in the summer, we can get it done in 3 to 4 weeks probably. So then we create a report that you can hand to your CPA and say, my cost segregation study is done. Can you apply this to my tax return? If the CPA has any questions, because some CPAs are not familiar with it, we will get on the phone with them and walk them through every step of the way. Here's how you file it. Here's how a lot of people think you can only do this with new purchases. We call it a look back study. I've owned the building for 10 years. I made 2 or 3 expansions. Can you do a cost segregation study for me now? We can, and you don't have to amend any of those tax returns. You simply take the results from the cost seg, apply it to the current year, and there's a form called the 3115 change of accounting form that you include, and that allows you to make the adjustment in the current tax year and not have to worry about changing anything prior year. So that's kind of the long answer to your question. The easy part, we create a pre-analysis. If you say, yes, I want to pull the trigger, we collect data from you. We create the final result, and the final result will not be an estimate. Our engineers will come up with numbers to the penny. You hand it to your CPA. We help your CPA apply it. You take the money and run. Go on, take the money and run.
So all in on the short end, 4 weeks, on the long end, about 8 weeks, depending on
Correct.
seasonality. Okay, good. That's good to know. And if anyone in the audience is interested in having a cost segregation study done, please put your name and information in the chat so we can get you in touch with Warren. I promise you, this is super beneficial. Like I said, we did it when we owned our properties. We'll do it with these properties I'm sure that we have acquired recently. And it just opens up the door to do, I mean, who doesn't want to save money? That's just the easiest way to go about this. All right. So we've talked all of like the good things about cost seg. Is there any potential risks or downsides to considering doing a cost segregation study for a self-storage facility?
I would say there's no risk. I mean, there's not an audit risk. There's not, the downsides would be if you're going to flip a property, you don't want to do it. If you already have a loss, you don't want to do it. And the reason being is if I have a loss and I create more loss, I can't use it. Now, it does just roll forward to future years. So even if you're at a loss, I have some people that do a cost seg study every time they buy a building. Even if the building's, not generating revenue yet, they know that they're going to be able to apply it next year. So those are the two main reasons. The negatives that people might say is recapture. Okay. If I take $100,000 worth of deductions out of my building, when I sell that building, the IRS says, I want that back. You get to keep, okay, I took that, we'll call it 100,000 in tax savings. I took that, I invested it at 12% annually. Okay. So I got to give that $100,000 back, but I got 12%, 120,000 every year. On 100,000, I got 12,000 every year. For 5 years, I get to keep that $60,000, but I have to give the depreciation back in the form of recapture. You can avoid recapture. I've kind of got a couple of slides, and
show those if you don't mind.
And Jessica has a copy of this if you guys want to use it. But how do you avoid recapture? There's a thing called diminished value. If I've owned a building for 10 years, the standard life of a door is probably 10 to 15 years. I sell this property, or I sell the property. In theory, I could say, hey, my doors are not worth $500 per door as part of the original purchase. They're only worth $100,000 now. That's called diminished value. And you can reduce your recapture that way. You can also do a 1031 exchange. Okay. You can also, what I get a lot of people doing, they say, I don't like the rush of having to do 1031 exchange. You have to follow certain timelines to get there. So they will say, hey, I'm going to sell building 1 and I have to address recapture. If I buy building 2 in the same year and I do a cost segregation study on that, I can use that loss to offset the recapture and then, kind of moving forward. So you're deferring the taxes. And some people, their goal is to defer until they die. And then the self-storage facility goes to their heirs and they have what's called a step up in basis because they didn't sell it to their heirs. The step up in basis, the depreciation starts over with the new heirs at whatever the current appraised price is. So mom and dad buy a building for $200,000. It's a self-storage facility and they bought it in 2010. 2013, they pass away. It goes to the kids. It's reappraised, and now it's worth $600,000, and the kids begin depreciating it at $600,000. So, that's a lot of people's goal is that, hey, I don't want to pay taxes to the IRS, so they use strategies to get there. And that's one way to do that. If you're going to hold it for the long haul, great idea. Not so much if you have to flip it.
Sure. What are some of those like common misconceptions or myths out there about cost segregation study that you want to clarify that they're not true?
Hey, my CPA has already done this. I can't tell you how many times someone says my CPA has already done this. And I say, okay, great. Why don't you get a copy of the depreciation schedule and let me take a look, and I'll see if there's anything else we can add value on. Oh, you got it. And I had one gentleman in Arkansas, we'll call him Bill. If he's listening, he'll know who he is. But Bill said, hey, Warren, I want you to look at my depreciation schedules. And he gave me his depreciation schedules. And he had several very nice facilities. They were climate controlled. They had wine lockers in them. I looked at it and I said, Bill, there's nothing I can do. Whoever your CPA is, they're a rock star. They're being very aggressive on your depreciation and they're helping you out. And so 6 months later, I got a call from that CPA saying, hey, I heard you talk to my client. I said, yeah, I did. And he said, I said, did he tell you what I said about you? I'd never met the guy. And he said, yeah, he told me you spoke highly of me. So now the CPA calls me and gives me projects 5 or 6 every year, and says, hey, do a cost X study for me,
That's awesome.
But to assume my CPA has already done this, I can't tell you how many times we looked at a depreciation schedule and said, no, your CPA has not done this. And, we can do it for you. That's one
Sure.
huge thing. Usually when you're doing an engineering based study, you can get more. That's what this slide kind of displays. I just had a significant self-storage owner from down in the South here, Mississippi, Alabama. And he called me and said, Warren, you guys used to be doing my cost X studies. I have to be honest with you. I asked my CPA to do it, and my CPA firm has done my last 3 or 4. I don't think they're getting as much as you used to get from me. So he asked me to do another new facility. And as you can see, this is just an example, an additional $42,000 that in tax savings that we got for this particular client versus what their CPA was getting. The CPA is a kind of a master of all trades, a jack of all trades. We're a master of everything depreciation, and that's
Sure.
why it's there. I don't want to trigger an audit. We've been around. My slide is outdated. I'm sorry. We're in year number 20, and we've done somewhere in the neighborhood of 40,000 cost X studies. So we have not triggered an audit. We have represented at least a dozen clients and audited, and we always worked out really well. So these are kind of my slides that kind of address that, recapture. We talked about that. Just because the one thing I would like to add is there are a lot of other things besides cost seg that you can benefit from. Okay. And so what I would challenge you to do is, and I say this when I do roundtables, I do this when I do presentations. Like this year, we're speaking at SSA nationally. I want to challenge self-storage owners to not just think of materials and labor when you're doing an improvement or retrofit project. So any renovation that you make, view it in the lens of materials and labor, but also tax. So here's what I'm talking about. If I do a door retrofit, okay, and I replace 100 of the doors, but I've got 300 doors in my facility. The rules of the IRS says, number one, you can expense those. You don't have to capitalize. So I tear out the old doors and throw them in the trash. And let's say I never did a cost X study on that building. It's a 39-year asset. And after 10 years, I'm throwing it. You can write off 29 years of what you're throwing in the trash. That's the first play. And that works with lighting. It works with roof. It works with doors. It works with hallway skins, parking lot. We have, Jessica mentioned earlier, we have an LED lighting company. And I'll give you an example just to show you how this works, whether it's lights, doors, roof, whatever. So when you tear stuff out, the IRS says you're throwing away 29 years of value. You can expense that and the labor to remove it. Then when the new doors go in the building, because they are a non-structural item, they qualify for QIP, and you get bonus on those as well. So the point is, when you tear stuff out, you get a benefit. When you put stuff in, you get a benefit. And hardly anybody thinks that. They all do CapEx projects, and they think they have to capitalize it all. Very few of them realize when you throw stuff away, that's a big tax play for you.
Sure.
This is our. Go ahead. You can ask a question.
Oh, no. I was just agreeing with you.
So this is an example of us. I got to peek over here to look at my second screen. This is an example of us in our lighting project. I did this last year. So the newest one, if you notice at the top, you got energy savings, but where it says project related savings on the right-hand screen, this project cost was a really, really large self-storage facility, $180,000. We got them $6,600 in rebates. We got them a $35,000 tax event, a $35,000 cash for cash value of all the lights they were throwing in the trash. So the lights were worth about $100,000 remaining on their tax life. Multiply 100,000 times the 37% tax bracket. It's going to be a little north of 35,000. That's where we're getting that number. And then all the new lights coming in qualified for 112,000 in QIP. In other words, they're a non-structural interior item of a building you had already in service for its purpose. So they get just that there is $100,000 worth of tax savings that you knock off that $180,000 lighting project. Then they had never done a cost seg study. We do a cost seg study for them. They have more tax savings than the cost of that lighting project. So that plays when you're doing doors, that plays when you're doing hallway skins, if you're replacing your roof. If it's a single item like a roof, call us. We can coach your CPA to capture it using what's called the producer price index, and that allows him to value what's being thrown away. The new stuff has all kinds of tax benefits going in. Doors, all that kind of stuff. We had a client out of Chicago recently who had a frustration with one of their projects, and they said, Warren, these are all the improvements we did for our project. We had done a cost seg on the building, and they said, we're kind of frustrated with how this plays out. What else is available for us? And we were able to show them. I said, it looks like you're spending $100,000 on doors. How many doors do you have in total, and how many are we replacing? And they said, oh, well, we have 100 doors total. We're replacing 30. I'm like, oh, expensive, perfect. You can write that off. So we looked at 5 or 6 things and said, we can do this if you like. If we do it, we would probably have to charge for you. I would rather coach you and your tax team to be able to do it on your own. Now they're really faithful, and they call us every time they get a building they want a cost seg done. We don't charge for that. We don't nickel and dime. They'll call us and say, here's what I'm doing. Are there any tax plays? We'll walk them through that. And we do that. It's just our value add. It's the way we build clientele. We don't charge anything. We don't ask anything for it, but we've helped them. So now they need a cost seg study, and they call us often. So I would challenge you guys, regardless of what CapEx or what renovation you're doing, call us, just ask us questions. Let us put you on the way to maximize what you can do. It's a great benefit that the SBOA has tapped in for us, and we want to share it with you guys. And I think we built in a little bit of a discount from our normal pricing if you call us and run it through SBOA. So
yeah, they did. You guys definitely did. So anyone interested in getting a study done, just reach out to us at the SBOA. We'll get you in touch with Warren and his team, and you'll be able to get that savings on top of tax savings. So it's just savings all around. I love this.
It is.
Now, Warren, let me ask you. So there's a lot of, there's lien laws that are state specific in self-storage. Are there any specific state regulations that people need to be aware of in this process, or is it more kind of on the national level?
It is primarily on the national level. It's a federal benefit that you can get. Okay. Some states every state complies with cost segregation. Okay. Sure. Put that on the table. You're good doing that both on the state level and on the federal level. Some states don't qualify for bonus depreciation. Okay. So for example, California allows you to take bonus depreciation on the federal side. So if you have $1 million building and I can generate $110,000 in tax savings for you, bonus depreciation allows you to take all that in the first year or two that you do a cost seg study, or the first year or two that you put that building into service. So on the federal side, I can get that $110,000 immediately. On the California side, that benefit is spread out over the life of the property. So I get a benefit of, a portion of that is 5-year and a portion of that is 15-year, and it's spread out over 5 and 15 years. So got it. That's the difference between it. And there's, I don't know, maybe 20 states that don't comply with the federal definition. They said, no, we're not going to do that. We want to keep up on our taxes, and we're not going to accept bonus. Sometimes on a state by state level, you can benefit for it in certain ways as well. I live in Louisiana. Jessica, you're in Florida. Mm-hmm. We have oftentimes after the hurricanes, when buildings get whacked, they do what's called go zone here in Louisiana, and that's bonus depreciation. And it's not something that qualifies on the federal level, but if you're in Louisiana in these particular boundaries and you got hit by the hurricane and you're having to rebuild, they want you to rebuild, so they allow you to take additional bonus depreciation. So that's kind of unique. I just called and spoke to a CPA just called me yesterday from Arkansas, and he said, Warren, we had tornadoes hit, so our tax returns aren't due for another 6 months. Can you do a cost seg study in? My tax deadline for September 15th has come and gone, but because Arkansas was in a I forget the federal's terminology for it, because they had these tornadoes, the government mm-hmm. said you can extend your tax return and you've got some other benefits that you have. So you have unique, specific state by state things as far as that goes. Okay. Some comply and some don't comply. Mainly it's a federal thing.
So if anyone ever has a state specific question, you guys have a resource that would tell you those different nuances and variances between state to state.
For sure. We have
Cool.
on staff 2 people that answer tax related questions, Dean and
Okay.
Robert. And then we also retain a CPA regularly on retainer that if we get stumped, we can call him and say, hey, Grady, can you find the answer to this? And there was a bonus depreciation that came up, and one of the cost seg firms out there was telling the self-storage world, hey, you're going to lose bonus depreciation if you don't do X now. And Grady actually took that all the way up to the IRS, and the IRS said, no, that's incorrect. You're good. Your bonus will still be able to take it in future years. The bonus follows the year you acquire or build a building. And so if you built a building in 2019, 100% bonus was available at that time. And so you could do a cost seg study now and get 100% bonus on it, even though bonus is starting to kind of dwindle or phase out based on the current tax laws.
Gotcha. So I think you may have earlier mentioned a few others, but refresh my memory if you did or didn't. Are there any other areas of tax savings owners can tap into that may have positive effects on a self-storage facility?
Yeah. So there's 2 or 3 things that we can help you guys with specifically, and they revolve around what's called the repair regs. And I'll just touch on them.
Okay.
I mentioned a few of them already, but what the repair regs do is they define what you expense as a repair versus what you capitalize as an improvement. If you expense it, great, but a lot of it is things people don't realize. So for example, if I do, let's call it a roof replacement, it cost me $50,000, and a lot of CPAs will say, hey, that's a big number, you have to capitalize that. But if I'm only replacing a third of that roof system, if the structure that holds it together, the framework, the decking, all that. If I'm just changing the membrane and the cover, I can probably expense it. If I'm doors, a lot of people think, hey, I've got to replace 100 doors. That's a $50,000 tax bill. I probably have to capitalize that. Not necessarily. If you're replacing a third of the doors or less, you can expense it. So first we want to coach people what they can do to expense something. And then once they can't expense it, we want to kind of walk them through the safe harbors that were out there. I was in ISS maybe a year and a half ago, and one of the big players in the self-storage world, Mr. George, called me and said, hey, well, he pulled me aside at the show and he said, Warren, I just bought 2 big self-storage facilities. He said, I've got to paint them all. Can I expense that or what? And I was like, well, how often are you going to paint them? And he said, he's really, I love him. He's really awesome. How often do I need to paint them? I said, well, George, if you're gonna paint those facilities more than once in a 10-year time frame, you can expense them on what's called the routine maintenance safe harbor. He said, all right, I'm repainting every 9 years. I said, okay, perfect. So those kind of things, there's one called the de minimis safe harbor. If you're doing something that costs $2,500 or less, you can expense it. Think of doors. I'm replacing 50 doors and they each cost $500 to do that. It's a big number, but if you itemize them, you might be able to expense them, because each door costs $500 or less than $2,500. So the de minimis safe harbor and the routine maintenance safe harbor, the 2 that people most miss. The routine maintenance safe harbor is if I replace something more than once in a 10-year time frame, I can expense it. So those are the 2 main things. We also do what's called the partial asset disposition. That's tearing something out, throwing it in the trash. When you do that, you can write off the current value of the tax life of what's remaining. QIP, we get CPAs that will call us and say, hey, I'm doing these big renovations, interior, exterior, to a self-storage facility. Can you help me define what's QIP? If I define something that's QIP, qualified improvement property, it's an interior non-structural improvement, then you get to qualify bonus depreciation on it. So oftentimes CPA will call us and say, help me determine what's an exterior benefit, what's structural, what's QIP, and that's another piece that we do. Basically, that is when you put the new stuff in, you often have a tax play. That's usually QIP. We don't, highlight it too much, but we offer 179D. That is, if you've just done a new building and it has energy benefits to it, you might get additional deductions. It's called 179D. And the last one is R&D. If you're doing something that has an uncertain end, you might qualify for a research and development credit. So all of those are things we can help you with. The thing that people usually will do is they'll call us and say, I'm set to pay a lot of taxes this year. I don't want to do that. Give me some ideas. And so that's a great entry point for us to walk through different people in the system. And we can say, hey, are you doing renovations? Oh, yeah, I am actually. Okay, let's talk about a partial asset disposition or QIP. Oh, okay, cool. No, I'm not doing any renovations. Have you recently built significant buildings? Yeah, I have. I've done a phase 2 and a phase 3. Okay, you might qualify for cost seg, and you might qualify for the energy efficiency 179D. So all those are things that are just great things we like to talk with people and kind of walk them through the benefit of it and see how that, we can help you. The easy question is, and just like Jessica's talking about, Ian and his team, a few years ago, we did a cost segregation study on multiple properties. The people that buy multiple properties oftentimes use cost segregation to buy more. It frees up cash flow for them. So I've heard people say, for every 2 self-storage facilities that I purchase, I do cost seg on those. That gives me the cash flow to buy the third, and do that again and again. So now they might have 50 locations instead of 2. So
yeah,
just pretty
it's
cool.
A very real statement for sure.
And this shows you some of the numbers. This screen here, a non-climate control self-storage facility worth $850,000, $45,000 in tax savings. A $3.6 million climate control, 569. So it's real numbers. This particular one is one of the self-storage players. We're sensitive about sharing names. We don't like to do that a lot, but it's one of the, most people have heard of their name, but we did 8 locations at one time. It generated a $10 million deduction or a $4 million tax savings. That's a pretty significant number. We recently did several properties that were pretty small. The cost basis, the purchase price was about $200,000, and they had 5 or 6 of those. So don't think it has to be some massive, huge building. We can do it for small ones too. And almost everybody I talk to in the self-storage world owns other types of buildings. So that's the comment there about residential rentals. We're seeing a lot of Airbnbs. Any kind of asset, if you are worried about your taxes, let us look at it, see if we can help you out.
That's awesome. Now, Warren, talk to us a little bit about CSSI energy services and how that kind of plays into the cost segregation study and what you can do with that.
Perfect. So this is the screen. Oh, it might be the other way. Sorry. Sure is. Yes, we have a CSSI Energy Services division. That was kind of the financial page I showed you guys. We do everything for an LED lighting project. If you have new construction, you might call us and say, hey, I've got a contractor. I don't need you guys to install the lights, but can you sell us the product? Okay, in that case, we can do that. In addition, one thing that if you buy the product from us, we won't do it unless you buy the product, but if you buy the product from us, there's what's called design to build. When you're building a new construction project, you can go to the energy company before you build it and say, this is what we have in store. This is what we want to build. If your building is higher than what the code asks for in that area, we can get a rebate for you on the front end. Okay, so that's a cool thing we can do on new construction. We can do design, we can do materials, and we can do rebates for you. On a retrofit project, we'll go in and that's a kind of more detailed project for us. We walk through the self-storage facilities and we have a little iPad and a software that allows us to drop a pin every time we see a light, and we can define what's in that space. So we walk through and do a complete audit of that property. And then we take it to our software and say, what kind of replacements are out there? We contact the local energy company and say, are there any rebates for this project? And the rebate says, well, yeah, you're going to put fluorescent tubes in there that are now LED. If you use this fixture, we'll give you a $100 rebate per fixture versus 75 of the current one you have scoped for that. So we track all that in advance. We go in and install all the lights for you. If you say I have my own electrician, we can work that way as well. We go in and fix all the lights, get it done, and then we leave some product for you out there. If you start to have lights that are going to go out, you call us, not some warranty place in China or wherever. We can use US made, or we can use international, whatever product you want to put in your facility. We can do all of those with it. And it's just a really cool thing. Brian, as our VP, Brian Lyles is our VP of Energy Services. He uses the terminology "one throat to choke." Okay, if you have an issue, you don't call the contractor or the warranty or the whoever. Call us, and we're going to make it right for you and make sure. We've never had any serious issues. We've never had LED lights. We've never had a batch that did that, so it's a beautiful thing. We've got a team that can do that at any place in the country. We have one client 2 years ago that did 46 locations. The total cost of that was $2.2 million. We got them $2.4 million in tax savings.
Wow.
Using cost segregation, 179D, partial asset disposition. We handed that to him at one of the SSA events, and it looked like it was a hot potato. Well, wait a second. You mean I'm getting this for free? The IRS going to come after you? And we're like, no, they won't. But if they ever do, call us and we'll sit right beside you and answer any questions they have on this. So
Yeah.
it completely paid for. I want to say it was 46 locations. The tax savings, the energy savings, and it was pretty impressive. So we've continued to do as they bring more properties online. We've continued to do those, and currently, in the past couple of years, probably 60 or 70 different locations spread out across the self-storage world. So Brian Lyles, again, is our VP of Energy Services. I got to mention Don Little. Don's been in the self-storage space even more than I have. So between the three of us, we're the key guys that can help you for CSSI tax, CSSI energy services. Don is in Texas. I'm in Louisiana. Brian is in California. And we really cover the whole country. We've got boots on the ground in pretty much every state to be able to come and visit with you and look at your property and define what's good and how we can help you. Does that answer the question?
Yeah. And I have one final question, and then I'm going to ask a couple of the audience. And I'll actually ask, we did a poll question. If the audience could answer, are you interested in receiving a cost segregation study? Yes or no? Please just drop us a line real quick. Yes or no? Warren, how far back retroactively can you go to get a cost segregation study? Let's say I've owned the facility for 15 years and I've never had one done. Am I eligible, or is there like a certain cutoff period? What does that look like?
That is an awesome question. Good job. You probably can go about to the year 2000. About 20 years is about as far as I would go. And,
Okay.
And the reason I say that is because longer than that, there's not a lot of benefit. The court case is that you can actually go back to 1987. Any building bought or purchased after 1987.
Okay.
I would say don't write that off, because you might have bought a building in 1990 and then you decided, hey, I've had the darn thing for 30 years. I'm going to do a bunch of improvements now. And so we might not be able to do a cost seg study in the original building if it's 20 years or older, but oftentimes you have added improvements that we can benefit from. I did
Gotcha.
a local person here in Louisiana. She had numerous facilities, pretty big ones, and they had been in service for like 10 years. She met me at the Louisiana show and said, hey, Warren, would you come look at my property? I walked through it. I created a proposal for her. Every time I see her now, she's like, I like you. You saved me a ton of money. Thank you.
Yeah.
So
that's how we feel over here on our side, for sure.
It is. The beautiful thing about cost segregation is that it's not like I'm trying to sell somebody an Edsel, an engine nobody can use. It's, there's no kind of, it's not a loophole. It's part of the tax code. And we're just translating the tax code to people. I know it may sound kind of technical and complicated, what we've talked about today, but really it's a simple thing. Do you want to pay taxes or not? Mm-hmm. If you don't want to pay taxes, we might be able to help you not pay taxes. Now you have cash flow for something else. That's, and it's pure form what it is. And it's an easy kind of sell. I try to not be a salesman. I explain to everybody, here are the details of how we can help. Here's what you can do. Are you interested or not? And sometimes it's a timing thing. Sometimes people say, hey, I bought this facility this year. It's not really making money. I want to wait till next year because I project I'm going to make a few $100,000. Let's look at a cost seg for them. So that's a great question for the look back idea. When is the ideal time to get it? Originally, when you purchase or build a property, because there's no additional tax forms that need to be filed. It's an easy and good thing to do. So that's a key to it, but you can always do it. And I'd say up to 20 years after you bought a property.
Awesome. Now, I mean, obviously you work for CSSI. I'm sure there are many other firms out there. If someone wanted to, talk to a cost segregation specialist, can you give me just like an idea of what some of those preliminary questions should be for them to vet this person out to make sure that they're legitimate or not?
I mean, I guess do you pay taxes is the easiest question to ask. That kind of vets a client, so to speak. Are you an owner? For a manager, unless you own a building, there's nothing we can do for you in the self-storage world. But an owner,
Gotcha.
that's a key person. The timing of it is less beneficial for us, but we meet lots of people in the self-storage world that say, I'm breaking ground in 6 months. Can you create a pre-analysis to show me what my tax savings would be like? And they'll actually use it on their performance. So they know, hey, I've got a number of investors in this self-storage property. I want a cost seg done. And they'll put that in their pro forma to show, hey, in year number one, we're going to save $150,000, $200,000, $300,000 on our taxes. So that helps you with the bottom line. So those are the types of people: an owner, somebody that's owned a property for a long time, somebody that just acquired or built one, even somebody that just did a bunch of renovations. That is a good client right there as well. You might have owned that building for 30 years, but you just, in the past 3 or 4 years, did a bunch of renovations. That's a great client. Does that answer your question you asked for, Jessica?
Yeah, definitely. And we just want to make sure that, owners and operators know how to go out there and source, a service like CSSI if they chose not to go with you, like what kind of those, onboarding questions should be for them to feel confident in their provider. So
we hope that you would use us, of course, but there are all other cost seg firms that are out there. I think what distinguishes us from the others is that we try to be a consultant on all these tax ideas. Mm-hmm. And I want to show you how you can expense something as a repair. I'm not going to get paid a dime for that, but I'm trying to help you do the best thing for you. So, that's how we distinguish ourselves. We were at the Louisiana show and we did roundtables, and a gentleman said, I use cost segregation, but my cost seg guys are not telling me what you're talking about. And I was explaining what a partial asset disposition, what QIP is, told him about our lighting project, kind of walking through all that, just showing there's more to the world than just cost segregation. He told me who he was using, and I kind of chuckled knowing who they were. And he said, I want to give you some of my business. So we did. He said, I'm used to getting it at this price. And I said, well, yeah, I'm going to give you some value add. Are you okay with a little bit higher than that? And he said, yes. And now we've done probably 15 properties with him. He likes the fact that we're coaching him on other things besides just cost segregation. If I can bill you for it, great. But if I can just tell you and your team, I don't need to charge you for this. Let me just show you how you can benefit that on your own. And we do that regularly to lots and lots of people. And that would be our value add. If you're not getting some of that from a cost seg firm, ask those questions. Is there anything else besides cost seg? Hey, I did an improvement. Is there a benefit that I can capture there? If they can't articulate that, that's a bad sign.
Yeah, definitely, for sure. Well, we are getting ready to be at the point that we're out of time. So if the audience has any questions while we have Warren here live, now is your time. If you would rather take it offline, we can get you in touch with Warren and his team. If this is something of interest to you, I highly recommend at least having the analysis done and see what can happen from there. Again, we did it with our portfolio and it was super beneficial for us. So we're about 6 weeks away from the National Self-Storage Association trade show and conference. Warren, I know CSSI will be there. They will be at booth number 147. So if you can stop by booth 147 and see Warren and his team. Warren, are you guys speaking or doing any roundtables while out there?
We are speaking this year, and we're doing the speaking is for cost segregation tax side. The roundtables is specifically on using an LED project and the additional ways to save money, the energy savings, the partial asset disposition, the QIP. So yes, I apologize. I don't remember when I'm speaking.
It's okay. It's okay.
So yes, look for us. We'll be speaking as well as doing a roundtable.
Yeah. And the for those that you don't know, you can go to selfstorage.org. If you haven't registered, please go register. I think room blocks are selling out. I think early bird rate and all of that is selling out, but there are still tickets available. It's in Las Vegas the week after Labor Day. Sorry, wrong holiday. Week after Labor Day. That Tuesday through Friday kicks off Wednesday morning. that the SBOA will be there as well. Please stop by booth 663 to see us. I will be speaking Wednesday morning at 8:15 with Dan Cosgrove from MSI and Dave Cooper from Storage King USA, talking all about internal audits and mystery shopping and how those can benefit your self-storage facilities. And we are back next week for another Self-Storage Unlocked, August 3rd from 11 to 12 Eastern Standard Time. And we are going to be talking about all of the different products and services that you should be selling at your facilities to help increase your ancillary income. So again, that's next week. And then, as I stated earlier, Storage for Rookies is August 24th, 11 to 4. I believe Iris posted the free code in the comments. So go ahead and grab that free code and register. It's a day full of learning. It's a good day. Thank you, everyone, for coming today. I hope this benefited you. And if anyone has deeper, more granular questions about cost segregation studies, other tax benefits, please get in touch with us or get in touch with Warren. All of these webinars that we do are put out on our YouTube page, so you can follow us on social media, specifically YouTube. And we always put the speaker's information in the description of the video. So Warren's name, email, phone number, and everything will be on our YouTube page if you want to get in touch with him, or you can always get in touch with me and I can get you connected to him. Please follow us on social. We are now on Facebook, Instagram, LinkedIn, YouTube, Twitter, and TikTok. And we have 2 TikTok videos finally. So we're all over social media. It's a great way to follow us and stay connected in the industry. Stay tuned. We have 2 quick announcements for you, and we will see you guys back next week. Warren, thanks so much for being here with us today. I really appreciate your time.
Perfect. Thank you as well. And I just checked. Yeah, booth 147 at SSA, and Wednesday morning we speak as well. So hope to see you guys there.
Awesome. Thanks, Warren.
Thank you.
Thank you for calling self-storage. This is how may I help you?
Yeah, and do you guys have any storage available, places, spots available?
You said you're looking for a parking space?
No, I need some storage. I'm moving to town, and I need to put my house in there, or my apartment, I guess I should say.
Okay, absolutely. Are you looking for an air-conditioned unit or a non-climate?
I think non-climate. I don't think anything in there is probably that, sensitive.
All right, and so with that, our non-climate units with the drive-up access, we have the largest being 10 by 35s, and then down from that we have 10 by 30s, 10 by 20s, and 10 by 15.
Yeah, maybe a 10 by 15. I mean, it's actually a 10 by 20.
A 10 by 20? All right, and those are starting at $269 base.
Okay, thank you very much.
You're welcome. Have a great day.
You too. Bye.
All right, everyone. Again, thank you for joining us for another Self-Storage Unlocked. We are back again next week, August the 3rd from 11 to 12 for another episode. So please come join us. All of the registration information can be found on the website, www.thesboa.com. Go to upcoming events. We have all of our Q3 events lined up. You can go ahead and pre-register for those, and we will be releasing our Q4 events here within the next couple weeks. So stay tuned for that. Hope to see everyone live in Vegas. Hope everyone has a great rest of their day. And if anyone is interested in mystery shop programs, as you saw at the end of that commercial, if you get in touch with us, you can receive 2 free mystery grocery shops, so you can test the system that we use and see if it's something that would benefit your portfolio. So if you're interested, send us an email at info@thesboa.com. Happy Thursday, everyone. See you live next week. Take care.